So before diving into the details of the new standard, I wanted to give folks really an overview of some of the big areas of change. Now, I'm not going to discuss each of the items on the next few slides in any detail, but we're going to hit on all of them in detail throughout the presentation. This was really more included as kind of a takeaway, just to, as at the beginning of the webcast, have an understanding of the big picture items that might be or that will be changing. So to touch briefly on these, the overall model is going to be based on the timing of when you transfer control, which is a change from today's model of recognizing revenue as risks or rewards of ownership are transferred. The collectability assessment is a little bit different as well. There is collectability evaluation in today's model, but it will be changing up slightly, as well as there will be an impact for situations where you can't conclude collectability is probable on day one. Multiple element arrangement guidance has changed as well. There's a few different models in today's GAAP on multiple element arrangements, depending on what industry you're in. There are some similarities to the general model, but changes to other areas. Warranties are an area that might have some changes as well, and you might see more situations where rather than accruing costs for warranties, you might have to allocate some revenue to a warranty. Variable consideration, it relates to situations where the amount you're going to get paid could change, and there could be situations, particularly when we're talking about additional amounts you might receive, like bonuses, where that might be under the new guidance recognized earlier than today. In regards to significant financing components, so that's situations where you get paid significantly in advance of when you perform or significantly later, that there is going to be bigger changes in situations where you get an advance payment. In those cases, you actually might be recognizing some interest expense and grossing up your revenue. As far as timing of recognition, the new model walks through when you recognize revenue at a point in time versus over time. Today, there's actually not a lot of guidance on that in current GAAP outside of contract accounting, so there could be some changes there as well, and there will be actually a model that exists. Licenses, today there's lots of different guidance on licenses depending on whether you have a software license, other types of licenses, other intellectual property, franchising guidance. So there's going to be just one model under the new standard, which will result in changes. Bill and hold transaction guidance, similar, but a few less criteria to meet to recognize revenue. Uninstalled materials, so this is a change relating to what we look at today in contract accounting, where you're going to recognize some revenue equal to cost for uninstalled materials transferred to a customer, which again is different. There's a contract modification model under the new guidance. There really isn't a model today under current GAAP. Presentation on the balance sheet, you'll see some changes there, some new terminology, contract assets and liabilities that we'll walk through. Disclosure requirements. So disclosures are an area that even if you don't have a significant impact on the timing of your revenue recognition from the new standard, there are going to be significantly more disclosures required. So that is something we will walk through, and that's is one of the bigger areas because companies may not be capturing all the information they'll need to today. Mentioned earlier that costs are going to be impacted as well, and also in situations where you're not recognizing or you don't classify something as revenue, such as certain gains and losses, that is also going to be addressed by the new standard, or is addressed by the new standard.